A pleasant morning to you and thanks for joining us on Business News today. I am Iriti Christopher. Making up today's headlines: Federal government open sale of short-term bonds. Banks deposit with Central Bank of Nigeria rises by 1,578%. And equity market opens week with 173 billion naira gain. The federal government of Nigeria, through the Debt Management Office, has opened a new window for subscription of its federal government of Nigeria saving bonds, offering attractive interest rates of retail investors for the month of June. According to the DMO, the offer includes a 2-year saving bonds due June 11, 2027, with an annual interest rate of 16.121% and a 3-year savings bond due 11, 2028, offering a higher return of 17.121% annum. The offer opened on June 2, 2025 and will close on June 6, 2025. A settlement is scheduled for June 11, 2025, while coupon payments will be made quarterly on September 11, December 11, March 11, and June 11 throughout the lifespan of the bonds. Report says each unit of the bonds is priced at 1,000 naira with a minimum subscription of 5,000 naira and subsequent multiples of 1,000 naira. The maximum subscription is pegged at 50 million naira. Consequently, the FGN saving bonds is targeted at retail investors and provides a secure investment backed by the full faith and credit of the federal government of Nigeria, making it a low-risk financial instrument. However, the bond, which is listed on the Nigerian Exchange Limited, qualifies as a liquid asset for liquidity ratio calculations by banks. It could be recalled that investors showed a stronger preference for longer tenor debt instruments of the May 2025 Federal Government of Nigeria bond auction, as data from the Debt Management Office revealed overwhelming demand for the 19.89% FGN May 2033 bond, while interest in the 19.30% FGN April 2029 bond remained subdued. Moving on, in clear demonstration of excess liquidity in the banking system, banks deposit with the Central Bank of Nigeria rises sharply by 1,578% year-on-year to 53.5 trillion naira in the first 5 months of the year from 3.19 trillion naira in the corresponding period of 2024. Report says the CBN lends money to banks through the standing lending facility at interest rate of 500 basis points above the monetary policy rate, and it also lends money to banks through repurchase arrangement, which involves the purchase of bank securities with the agreement of sales back at a specific date and usually for a higher price. Analysis shows that banks deposited 19.22 trillion naira in the first quarter of 2025, representing 956% year-on-year from 1.82 trillion naira in first quarter 2024. Consequently, banks deposits in the standing lending facility rose to 16.75 trillion naira in April, up by 3,793% year-on-year, from 428.98 billion naira in April 2024, while in May 2025 the deposit grew by 1,761% year-on-year to 17.55 trillion naira from 943.1 billion naira in May 2024. Meanwhile, in first quarter 2025, banks borrowing through the standing lending facility rose by 61% year-on-year to 50.46 trillion naira from 31.25 trillion naira in first quarter 2024, while in April 2025, banks borrowed 4.5 trillion naira, representing 170% decline year-on-year from 12.17 trillion naira in April 2024. The policy stipulated that all standing lending facility deposits are remunerated at the monetary policy rate minus 100 basis points, and with the current MPR at 27.5%, this resulted in a standing lending facility rate of 26.5%. On our next report, the Nigerian capital market has witnessed a transformation under President Bola Tinubu administration, with analysts citing growth in both the primary and secondary segments of the market. Report says key policy reforms, including foreign exchange deregulation, removal of fuel subsidies, the recent banking sector recapitalization has been credited with fueling this momentum. Accordingly, between May 2023 and April 2025, foreign portfolio participation in the Nigerian equity market increased significantly as foreign investors accounted for 9.93% of total equity trading value in 2023, rising to 32.32% by April 2025. This increase reflects renewed foreign interest driven by the easing of foreign exchange restrictions and improved macroeconomic conditions. Consequently, foreign portfolio inflows rose from approximately 122.55 billion naira in 2023 to 420.32 billion naira in the first 4 months of 2025. At the same time, foreign outflow increased from 168.83 billion naira in 2023 to 456.80 billion naira by April 2025. This pattern indicates active trading by foreign investors, balancing gains and managing risks amid economic uncertainties. Also, domestic investors, mainly institutional players, maintain the largest share of market activity, but their participation declined from 90.07% in 2023 to 67.68% by April 2025. This does not indicate a withdrawal, but a more balanced market with increased foreign involvement. While institutional investors accounted for 860.2 billion naira in trading value by April 2025, retail investors contributed 935.78 billion naira in 2023, demonstrating steady participation from Nigerian individuals alongside institutions. Total equity transaction increased from about 2.93 trillion naira in 2023 to nearly 2.71 trillion naira in the first 4 months of 2025. This growth shows rising market liquidity and investors' engagement. The total trading value in 2023 was 2.93 trillion naira. Foreign inflow were 122.55 billion naira and foreign outflows 168.83 billion naira, indicating net foreign selling, mainly due to foreign exchange uncertainties and a tight monetary environment. And the Nigerian equities market commenced the week on a positive note, gaining 173 billion naira in market capitalization as investors showed renewed interest in select large and mid-capitalization stocks across key sectors. Data from the Nigerian Exchange Limited yesterday showed that the all-share index appreciated by 284.25 points to close at 112,026.26, up from 111,742.01 posted on Friday. Consequently, the market capitalization rose from 70.43 trillion naira to 70.6 trillion naira. Despite the upturn in the market indices, trading activity witnessed a decline. A total of 517.95 million shares valued at 10.07 billion naira exchanged in 17,019 deals. This reflects a 73% drop in volume, an 84% drop in value, and a 9% decline in the number of deals compared to the previous trading session. The market breadth closed negative with 23 gainers and 36 losers out of the 127 equities trading during the session. Sectoral performance was mixed as the NGX Premium Index gained 0.88% and the Insurance Index advanced by 0.85%, while the Oil and Gas Index and the Industrial Index recorded marginal losses of 0.24% and 0.2% respectively. This year-to-date return of the all-share index now stands at 8.84%, reflecting resilience in the face of recent market corrections. It could be recalled that the Nigerian exchange closed the trading week on a bullish note as investor sentiment turned positive, resulting in a surge of 1.71 trillion naira in market capitalization. And on the official foreign exchange, the naira is exchanged at the value of 1,586.14 to the US dollar, while depreciating marginally to 1,797.11 to the euro and 2,143.36 to the British pound. It, however, depreciated to 11.08 to the Japanese yen, gaining marginally to close at 1,937.03 to the Swiss franc and 88.25 to the South African rand. That's how far we can go in today's business news. Do keep a date with us tomorrow for more business updates. I am Eriti Christopher. Thanks for being there.